The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. God, it's been yonks ages. Do you know what? And Peter just texted me, is the new format 15 minutes? We haven't spoken for months. And you want to limit it. You want to limit the joy. What's going on here? Oh, you two fellas all loved up. You don't want to talk to me now anymore. So I feel, lonely, sad, depressed. I've got to bother my family.
I'm always available. What are you on about?
Yeah, that's why Mrs. is going to dump you. Always available. That's his status on WhatsApp. Always available. All right, lads. In fact, I've got loads of messages. Where's the Weekend Podcast? What's happened to the... Is it coming back? Have you stopped it? What's happened to the Weekend... Non-stop messages. I tell that guy, stop messaging me.
Yeah. You just block that guy.
Yeah, blocked him. It's fine. It's all done. But I have people wondering where he was. I'm missing. Again, and with tradition, Paddy's not here. Which, Paddy's... He's the problem. I think. I just realised, really, he's the one who suggests Thursday, which I can't do. I just feel a bit knackered. I got boxing with my son and all that. And he keeps suggesting Thursday all the time. And then when we do something, he's never here anyway. It's like he's what's called a spoke in the wheels. Anyway.
You're going boxing with your son. Is anyone else there, or it's just you and your son boxing
Yeah, no, I
with
just
each other?
take him into the bedroom, give him a good whack around the bedroom, that's it. Every Thursday.
Boxing.
They dread Thursdays. Oh, Dad's going to beat us up again. Come on, sons, bare-knuckled this week. Get your tops off. Right, In fact, talking about that, there's a big boxing fight tonight. Are you watching that? Are you into that?
I'm really not. I used to be. I can't really get into it these
Are you,
days.
Steve?
Don't know why.
Is it Mike Tyson, isn't it?
Yeah, that's right, yes.
That's right, yeah.
No,
Holyfield.
That's the one. I love him.
Well, it's Tyson Fury's brother, which I don't really rate him that much anyway, too much. Tommy Fury and KSI. Do you know what I hate about the boxing? At the start, they start boxing, the standoff, the face-off. They're so childish. It's always, I'm going to smack your face in. I'm going to smack your face in. Go on, then. Go on, smack your face. Oh, I'll beat you up. I'll beat you. Wait till Saturday, so I'll knock you out in round one. Oh, I'll knock you out before we start. Just grow up, guys. It's like so childish, isn't it? Yeah. Why do they still do that in the face-off? I don't know. It's just, I sometimes I'm ashamed. I like it. Two guys trying to knock the crap out of each other. It's pathetic, really. But I suppose it's just basic art of just, two guys in a ring. Who can win? It doesn't come.
You love two guys in a ring, don't you?
That's what attracts me. It's the ring and the men. Yes. Yeah. Just men wearing very little, nothing, just hitting each other in the ring.
The ring.
Yeah, just stop hitting my ring. It's really sore. Anyway, boys, here we are. So, anyway, have you actually, been paying attention to the market? I know Steve sort of checked out. That's it now. Everyone says this in the bear market. I'm just going to do funds. That's it. And then, of course, the market will take off. All his small caps will shoot up several 100%. And he'll be saying, any more tips, Just?
What's the ticker?
Yeah, what's the ticker, Just? But have you been looking at the markets? What do you think, boys? What's happening?
Yeah, I keep an eye on it all the time, but I haven't been actively investing or doing anything. Just one eye.
Yeah, it's that bad at the moment. It's only worth one eye. You just look at it quickly. Yeah. Oh, no.
Yeah, and I keep that eye closed now as well because it's too scary.
Yeah.
So,
and the other eye says, "What's it like? Don't look."
Don't look. Yeah. Yeah. Ask me how my day's been. How's your day been? Don't ask.
Yeah.
That.
Yes, but
So I've been keeping an eye, but I'm I suppose I'm like lots of probably private investors, underwatering some or most of the stocks and hoping for brighter days.
Do you know if I've made one mistake? Is actually I've made more than one mistake. In fact, mistakes. I'm trying to teach. In fact, it's a good little video actually with Stephen Bartlett. So in fact, Steve, you're reading that book, aren't you? It's quite good. Is it?
I've read it.
You've read it. Have you read that Radio 1 book I gave you 20 years ago yet?
No. It's still in my sides drawer, though.
It's literally, I gave him my first book he ever read, I think, in his life. He said, I love this. I said, where are you? I'm nearly halfway through. And he's had it for 10 years. He never finished it.
I think it was about when Chris Evans joined Radio 1, wasn't it?
It was, yeah. I said, it's really good, that. Have you finished? No, I'm halfway through. So you've had it about 2 years, Steve. Yeah, no, it's good though. It's good. But Stephen Bartlett, who's obviously on Dragon's Den, social chain he founded, didn't he? Which is almost helping companies market on social media. He was into it a lot more before them, and brands had to get into it, and so. But I don't know how much he sold it for, but he sold it for a lot. And I don't understand that.
Quite a lot.
I know the company bought that recently, not for much. Anyway, but he's doing very well. So what's the book about, Steve? Because he came from a bit of a hard upbringing, didn't he? And he left school early, and he didn't have money. At one point, he didn't have money to sort of for school lunch and all that stuff, didn't he?
I've been recommended to anyone because I think it's generally just quite a good life book anyway. So whether you're setting up a business or whether you're just working for a company, I think it gives you quite good tips on how to be the best of yourself, I think. And
is it an autobiography or a biography or?
It's both. So it's a bit of autobiography, so it's a bit about him, but he's also then kind of giving tips, and he's kind of used his podcast series and all the people he's spoken to, and all the knowledge he's gained from them, and kind of brings it into one big thing. So there's lots of little clips of some of the YouTube, there's podcast clips in there as well. But
so he's written it,
he's written it, yes.
It's not a biography by someone else. No, right, got it.
And disclaimer now, haven't actually read the book. I listened to it.
Steve. Why is it almost like people look down on podcasts compared to books? You've got to read the words. You've got to read the words.
I think it's better though because it's him reading it, so it's kind of like him telling you the story, and you always get extras in an audiobook as well because they'll always say stuff which isn't actually in a book because they just kind of remember things on the fly.
Don't you find yourself falling asleep listening to audiobooks and podcasts?
No. I think you're listening to the wrong books, Pete. You can try and get some interesting ones, yeah?
Oh, okay.
You should, but also, I usually listen to walking the dog. It'd be harder to fall asleep when I'm walking the dog. I mean, I used to listen to his podcast actually quite a lot. I don't know why I've gone off it a bit. I just searched around for things, but I don't think I found out.
I just found out something literally yesterday as well.
Literally yesterday was it, Steve?
Yesterday.
When was it, Steve?
If you've got a Spotify premium account, you can listen to 15 hours of premium books every month.
Oh, really?
For free as part of your account, yeah.
So I can listen to that now, can I?
Yes, you can.
I've got that. Okay, so premium is it's about 13 quid a month. Is that right? Is that what you pay for it, basically? Is only one?
Well, I don't. I don't have it, but if you have it, you do.
Great tip.
It's something Steve discovered, but yourself doesn't have it.
Yeah, that's like giving a tip for a share. Going through it, it's brilliant, actually. Excellent, this company. I don't own them, but I'd worth investing in, I think. The reason why I said that, so we went off piece there a bit, but I saw Ed Sheeran, right? And I was explaining to my son, and he didn't he did it for a football trial, didn't get in, he got really upset. And I said, listen, everything's a learning. That's all life is about, is learning. I said, there are only mistakes if you don't learn from them. And Ed Sheeran, Stephen Bartlett retweeted it, but Ed Sheeran saying, is at a stage when he first started where people are just laughing at him sometimes, or saying, why don't you get a proper job? Why do you actually do something with your life and make you get? What would he do actually if he actually got a proper job and he's one of the millions just went to work 9 to 5 in an office rather than actually go for his dream? And he said I made so many mistakes. I had so many bad gigs where people would be talking and wouldn't be listening, and he said you have to go through that, and you have to go through. If you've got a passion for something, you got to keep going, and the mistakes you learn from them, you get better, you hone your skills in, and that is a bit like anything, isn't it? Investing. And I said, showed to Monty, I said, Mont, you'll become if you stay involved and stay playing football. You'll become better because of that. Because you think, okay, why didn't I stand out? What do I need to do to improve, to get better? And you'll be more determined next time. And it's the old thing, winners don't quit, quitters don't win. You've got to learn to get better. That's it. And it's completely that. Mistakes are not mistakes, are they? They're lessons. Full stop. If you don't quit, if you quit, they're not. They're a mistake. That's a mistake. But I think that's the bear market. I've learned so much in the last 2 years, and this has been a long bear market now. It's September the 6th, 2021. The AIM all share is still near as lows, and we're down 47%. Now people say that's 47%. That's not a lot. That's including all the winners. So some of the losers are down. Some of the losers have gone bust. They've gone. But but I've found it very, very. Hard, but I've learned a lot. I've learned a hell of a lot. In fact, I was talking recently about someone said they put all their money in. I was on the live show with John Human, and one guy said he's put all his money in one stock. And I said, be careful doing that. He said, it was the same as you did, back in the great financial crash with Lloyd's. And I said, yeah, look, it did play out for me there, but looking back on it now, I probably wouldn't do that ever again because, I've learned a bit more about, risk and reward and all that stuff. And I probably wouldn't ever risk that much because essentially if you put 100% in a company, you're 100% confident it'll win. And I said, no investment comes with no risk. All investments have risk, all of them. So either you founded the company and you're that confident about the company, or you're deluded. So I said, never put anything, all your money in one stock. But and in fact, if I made one mistake, I said it's probably holding on to stocks too long and not paying attention to the trend, and things like that. Because recently I've done okay, and I've switched a little bit, just adapting, what I'm doing, and I've been doing okay. Is there any of your stocks rallied, boys, at all?
No, none.
Well, I bought into Destiny Pharma, so that's kind of like rallied, hasn't it?
Did you buy into my latest investment? I think it's one of the best investments I'm ever going to make. This one, I know I say that a lot. It's like next year.
Is it a savings account?
Next year, Rodney will be millionaires. Yeah. No, you obviously read my blog when I send it out. My club, yeah.
Regularly.
Oh. Well, tell me about my latest investment, which
it's a savings account.
Yes. You will get 3.2%, and they give you a free pen, which is very nice. In fact,
well, no, but you can get like a fixed rate of 6% for a year or something, can't you? So,
can you? You have to lock it away for a year, though, do you?
Yeah, not instant access.
I wouldn't put it in Metro Bank.
No, that's good.
Well,
no,
I don't know
your latest investment. I don't know your latest investment.
I've told you about it. I said you'll love this company.
Oh, okay, good.
Did you know, right, and this is why I like it, right? I don't know if you knew this, boys. Do you know what third-party cookies are?
I do.
It's not like someone who's been giving you a bite of their cookie after they've eaten it, or two people have eaten it first and said, "Do you want a nibble on my cookie?" No, you've given it to two people before me. My dog wouldn't mind that, actually. But do you know what third-party cookies are, Steve? I'm
guessing it's when a company sells on your information to someone else.
It's, well, sort of. Yeah. Do you understand what it is, Peter?
I do. It's on a website, a cookie that isn't related to the website that you're on.
Yeah. And I didn't. And do you realise they're being phased out now because of GDPR?
Yes.
And all that stuff. And that's massive. This is huge.
Yes,
now,
huge.
The advertising industry, right, is one of the biggest. The digital is one of the biggest in the world. I think last year it was estimated to be around 700 billion, and this year it'll be at 750 billion. Now, when you talk about market sizes, you think that is massive because obviously when you're looking around investing companies, you look at the addressable market, the serviceable market, and all that. So total addressable TAM, SAM, and SOM, which is a serviceable market or serviceable table. Anyway. So that is huge. Whenever I looked at things, I've seen things in 1 billion, 2 billion, 5 billion, 10 billion, whatever, 100 billion. But 700 billion is absolutely massive. That's digital advertising. And I didn't realise most advertisers, how they get to you is with these cookies. So you go to a website, for example, who's selling stuff, and they'll drop a cookie in your browser. Ooh, sounds a bit saucy. That can I do one if I drop a cookie in your browser? I'll try that. Megan tonight. Hey, Meg. You dropping a cookie in your browser.
Okay.
But they drop a cookie in the browser, and this has been. Do you remember before you didn't even? Now you get these things saying, "Do you want to accept cookies or necessary cookies, all that stuff?"
Yeah.
But before they didn't even tell you. It didn't even tell you, and all of a sudden you'd be like Steve would be going around the internet, and there's a GIMP mask would appear everywhere he went. Thinking, why is this GIMP mask? I've only looked at it once, this website, and it was by accident. But this GIMP mask, for £99 is following me around. And so you go to other websites, and that cookie's still in your browser. So it appear in Google Ads around the internet. That's not allowed anymore. But Safari...
But that was phased out a while ago. Anyway,
no. Safari and Firefox done it. Google haven't. Yeah. Google, of course, is the biggest advertiser. They're massive. 65%. Of Chrome takes up 65% of all browsing activity. So they dwarf every other player in the space. And in fact, let me see the rest. The second one is like Apple owns Safari, of course. They phased them out. So Safari 19%, Chrome 65%, Firefox 4%, and those are the top three most used browsers. So when Google do it, and they did say they were going to do it at the back end of 2022 and 2023, when they do it, it'll be huge because I think it's what they do. But I think they get almost like 230 billion off Google Ads You know, and in most ads you see, you know, the big advertisers, aren't there? Sort of Facebook, which is a walled garden, anyways. Within that, there's Google Ads. Well, what else is there? What else is there? Anyway, this is being phased out. So okay, so you're thinking, okay, well, how do advertisers now target people? What do they do now? How do they do it?
You're only talking about just the display network, so that's only relevant to display, and yes, display advertising, not being able to do that and use that history. But you know, paid search still is a massive part of obviously Google's ad revenue. I don't know the percentage, but so it's only a section of their ad revenues that would be affected by this, by the taking out of the third party.
But it's still quite big because, you know, a lot of people, Google Ads are massive. That's still 230 billion they get from Google Ads. So, you know, following around the internet, I mean, using third party, so that's still a lot of money, you know. So you're thinking, well, how do people target you now? Before, Steve would have this GIMP mask going around, you know, following them everywhere. Yeah. And now they can't do that. They're phasing that out. And there's a company listed in the UK that essentially they are an advertising agency, and they for example, I'll give you an example of some of their clients, right? And it's quite amazing. And they work with Nintendo, where are they? Heineken, Mars, Green King, Sony, Toyota, Lego, BMW, all the big companies, Snickers, you know, and they basically help, like, for example, Channel 4, when they went to All 4 on their digital, they wanted to sell advertising. They went to this company, and the company is called Silver Bullet Data Systems, right? And they'll go in and consult with them. They'll build a stack and all that stuff. And they'll sort it out, how to capture your data, what to do with it, and they actually build a platform for them. And they're, like, you know, qualified on all these Adobe, Salesforce, people are, and all this stuff, all the programmatic systems, right? Now that's good. That's the consultancy side. They've always had that for many years. They listed like 2 years ago, and I spoke to them when they first listed. I thought, I like this a lot. So a lot about data and being able to manage your data and helping agencies, all that, and in fact they do agencies and brands. So I like that. But 2 years ago they started, or 4 years ago, sorry, they started developing what's called 4D AI contextual platform, right? What's this about then? It's very clever. And it's about contextual advertising. And it's about AI reading websites. So rather than follow you around the internet, what they do is this platform sits on like demand side, you know, programmatic platforms, and people will go to them and they'll look at safe, suitable, relevant websites to put adverts in. And their AI can read video and connected TV. They can pick up brands, nudity, anything like that, so it makes you suitable, and the results are amazing. And they've just started launching. They've launched it now. They've got 30 big agencies already. In fact, in June they started trialing it, and they've got like Disney, AXA, Heineken, P&G, Samsung, all trialing it. And it's very clever. It can read everything. It's, especially theirs is the best. You know when you open your phone with your face, it's that kind of, they've got that technology built into that platform, and it gives websites a score, you know, on stuff. Now listen to this, right? In a trial with Renault, their 4D solution was pitted against a contextual advertising solution offered by Google, DV360. With 4D outperforming the competitor solution across all metrics, achieving a 133% increase in click-through rates and a 51% increase in page views. And that's just one of their things. That you compare them to all these, and this literally they are cutting edge. I mean, there's a lot of people who do contextual advertising. It's about context, and it's a lot better actually than actually just following you around with a cookie. Because let's say Steve wanted to buy a nice pair of shoes, you know, a branded shoes, something from a nice brand, and they put a cookie in his browser, and he went to you know, one of these mucky websites he always goes to, you know, and they use Google Ads on that website. Then that brand then is served on that website. You'll see those pair of shoes from that brand served on that dirty, mucky website. That's not very suitable, you know, for that brand, you know. But with contextual, that wouldn't happen because it's the website and the context that are measured rather than the person itself, you know. So they give these, especially connected TV. They're working with connected TV a lot because they can just put their software over connected TV and they'll find out how good what the context is for your brand, you know, if it's suitable, if it's relevant, if it's safe, and all that stuff. But it's amazing, and it's only just started. The company did their half-year results this year, about 14 million market cap, but they did half-year results. Revenue's up 76% to 4.6 million, so just starting out. But they are forecast to double that. In fact, the AI division just started, went up 122%, and they've got a lot of people trialling it. And the thing is, we are now at a key point where Google are finally saying 2024 is the time we're deprecating cookies, third-party cookies, getting rid of them. Yeah. And so it's a massive shift in the advertising market. And these are one of the best products around. And if you look at it, right, I said, global digital advertising, 731 billion. 65% of advertisers will be adding to the contextual-based budgets amid global regulations. Do you know what? Some of the competitors, I'll get it now, but they are more advanced in the actual. Where's it by? They are more advanced in this facial sort of recognition thing, the computer, the video reading. Where's it by? I'm just going to look at I go to the companies. There we are. So they make it better as Google. Now Google's offering, they've beat that hands down. You know, Oracle's Grapeshot, Peer 39, and Double Verify. They've already got senior management from Double Verify, but Grapeshot, contextual intelligence platform, provides brand safety and contextual targeting, but it's not good with video like theirs is. It was acquired by Oracle in 2018 for 325 million. Like I said, silver bullet is 14 million. The next one, Double Verify, where they've got management from, quite a bit, 2 or 3 people work now, senior manager work for them. In 2020, Double Verify, which was founded in 2008, reported revenues of 243 million. In 2021, it was listed on the New York Stock Exchange, 5.6 billion. And you realise, if you've got a hot property and you're in digital advertising, and their main market now is America, by the way, there's huge upside. If you're growing very quickly, you've got the best tech. And that's why I love this company. It's scalable. It's small. It's very scalable because the software product companies just use it themselves, or they can use it via a demand-side platform, whatever, anything. And it just scales very quickly. They spent years developing it, and in fact, the costs are quite high, but the costs now have dropped in half because they stopped developing it, and they're just little iterations. But I like it a lot because digital advertising is never going away. We've got this huge once-in-a-lifetime seismic shift. We need different kind of in targeting, and I think it's great. So, I mentioned this a long time back, Peter, didn't I? I said, have a look at this. You like this, Peter, I said, because it's in your sort of, it's on Tinternet and all that. So, if you work on Tinternet, and a helping brand, what do? You help brands and you get awareness on the internet stuff?
Well, yeah, paid advertising is part of what we do, but not really. But I suppose that, digital marketing in a broader sense. But yes, quite a lot into MarTech these days, marketing technology. Yes. But yeah, no, that does sound interesting. You did mention it. I haven't looked at it, but I will do.
Well, it's only 14 million. If you look at the forecasts, they're literally doubling their revenue now for every year for the next couple of years. So there's plenty of upside, and I genuinely think it could be one of these. I don't want to ramp it, but I think there's no lack of scale here because the other big players in the space don't have their what do you call it? Hang on a sec. The actual words. When I use the words,
speaking.
Speaking, yes.
Hang
on. I'm chatting to Ian actually on the podcast. But listen to the podcast; it's very good because they. Here we are. Why is it different from others? Because it's reading TV shows. I don't know what it's called. But essentially, it's the same. It's the same technology. That reading your face does, but they can do that to videos. Like for example, if an advertiser, so this is not the thing is this is getting a better return on investment for people advertising already. It's not trying to convince people to advertise. So essentially, this sits on demand side. These programmatic platforms massively that fill these spaces on the internet, the Google Ads. They'll put their you can run your ad, for example, through their system, and they'll say we're thinking of advertising on these websites. And they'll say, they'll give you a score on, the rating, the relevance, suitability, and all that, safety as well. And so it's already there. So, and these people now, they can't rely on third-party cookies, so they can't do that. So it's literally a very good way to do it. But I think it could be massive because you can already see, there's already, it's working because it's validated because the revenue growth now is going crazy. And so, and in fact, I talked to Ian. He's a very nice guy, the CEO. And he said, yes, we're getting a lot of it. I think it'll be taken out. It'll be taken out like Double Verify was, like Grapeshot was. Oracle bought it, So Google, Oracle. These are the guys they're playing with. They're messing around. They've got good tech in this area. There's no bigger companies than these, so the Oracles, the Googles of the world, and they need to have the best tech, don't they, on the advertising platform. So I think if you have something that's possibly the best, and you can see by their clients, it's very good, because their clients are the biggest in the world, AXA, Renault and all that stuff, Heineken, they are big clients, so check it out, guys, check it out, you know what I'm saying? Yeah.
Yes, I will have a look at it, thank you.
And I mean, I'll do a video on the weekend, by the way. I did do a Cryptic Clear on Friday on Twitter about it, saying this is a company. Did you see my?
But their competition in that space must be pretty hot because of that technology.
Yeah,
there's a lot of people. There's a lot of people swinging that pool.
Oh yeah, well, but they are, like I said, they beat Google's suggested contextual platform. So if you are beating what's Google,
Google don't just take their ball home, do they?
No, they just buy you out.
Yeah, well, yeah.
But the thing is, they spent 6 years developing. I know that. So said, computer vision. Basically, they have computer vision. Their IP they've been developing for years. There's lots of. He said there's lots of contextual. There's AI, uses NLP, all that stuff. Lots of it's like sort of contextual sort of things. But said we are probably the most advanced now in computer vision. So specifically connected TV, like Netflix or streaming TV or YouTube. So that's a huge market, Like I said, I think they're in the space where if you are beating Google, what the product Google's suggesting, then either Google develop it, but that can take years, I suppose. And also they're already working with big brands, or they just buy you out, don't they? So that's why I just think it's a very hot space. Very hot space, you know what I'm saying? Any before we go, because I know you don't want to speak to me for long, Peter, Steve. You didn't even deny that. You didn't even deny it. I know you don't want to speak to me for long. I think you're right there.
Yeah, sorry.
Yeah. Steve, are you still there? Steve?
I'm still here. Yeah. I'm still here.
Any thoughts? How's your fund going? You topping up regularly?
Yeah, it's still quite depressing though, because I put money in my fund every month and my portfolio keeps going down, which is interesting.
Yeah, but it's not interesting. It is annoying.
It's annoying, yes.
Do you actually, if you're that objective, Steve, you could be a brilliant investor. Well, that's interesting. My portfolio is going down every week. That's very interesting. That's very interesting.
Yeah. But my two Vanguard funds have had a good, 12 months really. They're up 11%, 13%. It was, very good really in these conditions.
Yeah, well, go on.
Well, I think sat in an ISA, it's tax free, because that's the other thing with, high yielding savings accounts are all very well, but ultimately you'll get taxed on above your threshold.
Which ones are you in, Pete?
The Vanguard ones, the ones that we were in, the
100% equity
life strategy and the.
I've not noticed the life strategy really doing that well at the moment. It just seems to be flat, sorry.
Yeah, it will, Steve, because the entire world's markets, apart from the S&P, in fact, if you look at the big stocks, pretty much, there are some. I look at, on this, Take the Stock live show we do, and just generally, I look at, what I'd say 20, 30 charts a day, and I'd say 99% of them are in downtrend, nearing, 2-year lows. It's unbelievable. When the market rally happens, it'll be huge. But you were holding about 7,000 stocks in that thing, Steve, and I'd say, but apart from the 20% of them are S&P, so that's holding it up. The big stocks, the big seven, the Magnificent Seven, as they're called, those are holding it up. The rest, everything else, is pretty much down. So, when the markets tend to rally, and that will happen in 2024, guys, by the way. The bull market starts.
I put it in my diary.
Yeah. What date?
Let me just check. I think it's going to be like, it's not going to be straight away.
December.
No. I think it'll be in Q1, or end of Q1. Because when the banks realising they're crashing the economy and then people are losing their jobs, they're going to have to ease up on interest rates. And it takes a while. Like I said, Sandra Banker this week, a lady, part of the MPC who votes on the interest rates, she voted to pause last time. In fact, I think she voted to bring it down. No, pause maybe. But she said she understands that only 20%, 25% of the interest rate raises are being affected, are being felt right now. Because there's such a lag, of course. If you go back, like, say, 18 months, we didn't just start hiking. And already it's affecting lots of businesses. The amount of profit warnings I'm reading on a daily basis is unbelievable. It's like, it is affecting businesses. And when the banks realise this, only 20% of the rises so far have been affected. It's going to get worse unless it's not doing. But the banks will have to step in. And that'll happen next year. and the market will rally like crazy. And then you'll see your fund go up, Steve, because you'll see about 8,000 stocks going up. But what the thing is it flat? That's a good thing, though, isn't it? I mean, I've got my biggest holding is cash. My second biggest holding is my fund, which is like that dividend-paying fund. And that's literally down 5%. That's all I am. But I've been topping that up. So, and that's FTSE 100, 250. They're big companies, but again, that's not, the FTSE 250 being taking the hammer in, but some of the in the 100 are holding up. But I said that'll rally. I mean, but it's good to only be down sort of 5%. The rest of the market.
I'm not complaining. It's flat. I'm complaining the fact I'm putting a nice decent wedge into it every month, and obviously all the other AIM stocks that I own are obviously slowly still chipping away downwards, aren't they? So it just kind of levels itself out.
Yeah, we'll see it as buying units. You are buying more units, which are like half full. But someone will top those. It's almost like buying glasses of beer, right? And you only have to buy half a pint in a pint glass. You get pint glasses, and all you have to buy is half a pint. When the bull market comes, someone will top those up to the top, and you'll have like 1,000 beers to drink, Steve.
It'd be nice if the other AIM ones recover a little bit, so I can start selling a few of those badges off. They'll
either recover or go bust. It's one of the two.
Yeah.
But no, honestly, you will see it. I mean, the why it's so painful is because we largely invest in micro nano-cap stocks, which are, they are more volatile in the market, like 2 or 3 times more volatile in the market. So when they go up, they go up 2 or 3 times faster. When they go down, same, So, and you may not believe that now, but they'll rally. You watch all the people who be sensible in big stocks, like I said, during this bear, who switch to bigger stocks or funds. They will start looking at, because it's hard to sit there getting like 5% on a fund when you're seeing stocks go up by 200%. And I think, bloody hell.
Yeah.
And that's why people jump to crypto, essentially, before, And I don't care how disciplined you are. I mean, you've got to have the discipline of Buffett not to want to jump to some fast-running stocks, when the market starts galloping. Like I say, funds can't do that, but they're a steady backbone. And I say, so anyway, you should have a fund should be a steady backbone to your portfolio, because when you get in retirement, you'll always have that. But to try and top that up, dabble in some sort of, volatile, scalable, really good small businesses if you can, but be careful in downturn. They will turn down faster. That's why you got, I think, look at trend, and in fact, just look at 200-day moving average. It crosses that. Get out. Anyway, looking forward to the rugby, boys.
Yes, weekend, the quarterfinals. Who's going to win?
Is it today? Wales are playing.
Yes, 4 o'clock, Steve, on the dot. Yeah. They're playing Argentina. We'll beat those, won't we? I mean, they started off bad, but I mean. I think Wales are slowly getting better.
They're pretty good at football, though, aren't they?
Yeah, good point.
So I don't think that's a good point, actually, Peter.
No, it's a good point.
What are they going to do, Steve? Just saying, no, we want to play football today?
Yeah.
Maybe.
But they're good at being a South American country, aren't they? Yeah, good point.
They are. They're very good at wearing those blue and white striped tops.
Yeah, they're very good at that. Yeah, good point.
And having dark hair, generally, I think.
Yeah.
Yeah,
and speaking Portuguese.
Yeah, Steve, they can't play. They can't do it.
Okay, as long as they stick to rugby, we should be okay then. Yeah.
Yeah. Okay. All right. Paddy's just text. Look forward to listening to it, boys. I said, "Are you joining, Paddy?" He said, "I've submitted my answers yesterday."
Yeah.
All right, boys. All right, then. Have a nice weekend, boys, and maybe we should try it again next week sometimes. Because there's a lot of people wanting to hear your opinions on stocks and shares, boys.
Really? Okay, good.
Yeah.
You're sounding a lot more clearer now you're back in Wales there, Pete.
Yeah.
Thanks.
Yeah.
Clarity.
That's because he's all loved up. Pete and Steve finally got together. Yeah. Couldn't resist it in the end.
Yeah, that's
meant to be. We're meant to be, Stevie B. Right. All right, boys.
You're a very strange man. Right, bye.
Bye. Cup of tea, Pete?
Yeah, thanks, Steve.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.